On Friday, S&P 500 closed above the Ichimoku cloud by 2 or 3 points. Similarly, in case of the Dow Jones exactly in the same manner also closed above the Ichimoku cloud by a few points. And if you notice the primes means these the heavyweights in the S&P 500. All of these the primes were more than 2% up yesterday for no good reason or for no known reason. Because of this extremely heavy push, the S&P 500 and at the same time the Dow Jones, it was able to close just barely above this the Ichimoku cloud. Now because all of the technical indicators were already bullish, it was 90% bullish, the S&P 500 and the Dow Jones. And after the Dow Jones and the S&P 500 has closed above the Ichimoku cloud, this means that now it is 100% absolute bullish. And for how long it will remain bullish? At least until Monday. Why until Monday and why not for the rest of the week or for the rest of the month? The thing is that on Tuesday, the CPI data, the inflation data will be published. Now because back to back we have seen very heavy upward movement, gap up open, upward movement, gap up open, upward movement. Okay, only on Thursday it came down and then on Friday it moved up. Again a very heavy engineered movement, right? That is the reason, that is why we are saying that only until Monday the entire US stock market can remain bullish. What will happen after Monday will be decided by the CPI data or the inflation data. That's it, as simple as that. Now let's see what we were expecting in this the previous week. So previous week it was very much clear that the S&P 500 will not go bullish, will not move up until and unless it clears the 4393.57. If the S&P 500 fails to clear and close above this the mark 4393.57, then it is not going any more bullish, it will simply come down. Exactly the same as happened on Thursday. On Thursday, if you notice that the high of the candle was 4393.40. So it missed only by 17 cents. Only by 17 cents. So technically it was destined to come down. And then the comments of the Federal Reserve Chairman last week, the Federal Reserve Chairman during the FOMC, he was dovish. This time the Federal Reserve Chairman, he cleared his intentions and they were hawkish. Hawkish intentions heavily saturated the US stock market and all other factors, and a failure by 17 cents brought the S&P 500 down heavily, and the same we have seen in case of the Dow Jones. However, what happened on Friday, it was exceptional. It was an engineered and it was an exceptional movement. Now one more thing that did not happen, and that was the November 6th, the theory of the November 6th. So if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. And this S&P 500 weekly technical analysis is for the week of November 30th. That is from November 13th, which is Monday, through November 17th, that will be Friday. So the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Last week we have seen that there was an engineered movement, very heavy engineered movement. This engineered movement disallow the crossover of the moving averages on the weekly chart, and then the moving averages, they came in this kind of pattern which we call as the slip. Okay, and this the slip, it allows the bullish movement. However, in case of the Dow Jones, the moving averages, they are still in the bearish side because there is a confirmed crossover, okay, in the moving averages, and still there is no recrossover in the bull side. I will discuss these things in detail on the weekly chart. Second point of the agenda is that why US stock market is manipulated heavily. Okay, so briefly I will cover, okay, this is the manipulation, the recent manipulation, okay, particularly the manipulation on Friday, and then why it was needed, and what will be the repercussions of this particular movement. Not just this movement, but this also, okay, this kind of this movement. So in detail, okay, in this, and because there is a very well known, okay, manipulation technique, pump and dump. Okay, this is what we can see in action now. The third point of the agenda is the S&P 500 technical analysis on the daily chart. So as I mentioned here, that they compelled the S&P 500 to close above the Ichimoku cloud, okay, by only 2 points or 3 points, okay. And similarly the Dow Jones, because they wanted everyone, including the retail traders and the technical traders, okay, to align bullish and to go bullish, okay, in some manner. Now, the fourth point of the agenda is the probable movement of the S&P 500 from November 13th, which is Monday, to November 17th, that will be Friday. So just like this, the probable movement last week, okay. So whatever is expected to happen technically, okay, I will cover in this the last point of the agenda. And guys, I would like to add a disclaimer to this S&P 500 weekly technical analysis, that this S&P 500 weekly technical analysis is neither a financial advice nor an advice to trade in any form or in any manner. So guys, I'm going to discuss the first point of the agenda, which is the S&P 500 technical analysis on the weekly chart. So before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community for the daily updates, the daily analysis of the S&P 500 from Monday through Friday, then I've given the link in the description of the video and also in the comment section. So now guys, we are here and this is the first point of the agenda of this S&P 500 weekly technical analysis. And this is the weekly chart. So weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. So let's first analyze the candle itself. It's a bullish candle, a good bullish candle. Okay, not a heavy bullish candle, but a good bullish candle. Okay, and the closing of the candle was approximately equal to the high of the candle. This indicates that on Monday we may expect a gap up open, or irrespective of any open, a bullish movement initially. Okay. Again the same thing, because last week also it was a very heavy engineered movement, manipulated movement. This time also on Friday, okay, it was manipulated. This means that a gap up open or an initial bullish movement, it should happen. However, it is not 100% confirmed, because a 100% confirmation comes when there comes a technical movement. For example, if you look into this candle, this heavy bearish candle, in this candle the closing of the candle was approximately equal to the low of the candle, and also the technicals on different charts were also supporting a gap down open, or irrespective of any open, an initial bearish movement. That is why we have seen a gap down open and then a bearish movement. Okay, so this was a technical movement. Okay, then fine, because it has happened, this means that it will happen in this way, right? However, in this case, in the present case, okay, it is different, because now we have seen that an obligation is still pending to 4291, that is still not fulfilled. Okay, and other than that, okay, an engineered movement on Friday for no reason, absolutely no reason. Okay, and those who do not know much about the technicals and who rely on data, then yesterday on Friday, the Michigan consumer inflation expectations data was published, and this data was published, and this has confirmed that the consumers, okay, consumers, business, okay, and the retail traders, all are expecting a movement, an upward movement in the inflation, a bullish movement in the inflation. Okay, so this means that they are expecting that the prices will further move up and the inflation is not going to stop. So what was supposed to happen based on this data, the market was supposed to give up. Okay, however, after the data was published, then they took like half an hour or so, okay, to decide what to do, and then immediately they pushed it up. Okay, so I will discuss this thing in detail in the next point of the agenda. Anyways, so it is clear about the gap up open and why it is not 100% confirmed, although there are good chances that okay, it can happen, because Monday is still free for them. Okay, now let's talk about the technical indicators. So when we talk about the technicals, so now technically on the weekly chart, S&P 500 is 1 2 3 and these three. Okay, so on the weekly chart, the S&P 500 is 75% bullish on the weekly chart. Okay, Last week it was 60% bullish, but now it is 75% bullish on the weekly chart, and on the daily chart it is 100% bullish because of the closing above the Ichimoku cloud. Okay, this means that it can still move up only until Monday. Remember, only until Monday, because Monday there is nothing as such. Okay, Tuesday morning before the open of the stock market, the SN this is the CPI data, CPI data, core CPI data, okay, and some other data will be published. But this is the primary data, the inflation data, okay. And recently, on Thursday, the Federal Reserve Chairman, okay, he went hawkish and he said that Feds can still raise the rates. Now, guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is that why the US stock market is manipulated, or how the US stock market is manipulated. Okay. So one thing, okay, that you can clearly see here, that the movement on Friday, okay, it was clearly manipulated. There was no technical reason that why it should happen after the, particularly after the formation of this bearish engulfing candle that has engulfed the three candles. Okay, so anyone who knows technical or who is aware about the technical, okay, so all will agree with me that after the formation of this very heavy bearish candle, there was no reason for no technical reason, okay, for this kind of candle. So in my recent updates to my Patreon community members, okay, I mentioned this thing, okay, again and again, that see, as of now, there is more than $1 trillion, okay, in credit card debt, and the total debt on the US is, I think, it is more than $33 trillion. And recently, okay, all of means any kind of debt, okay, it is at the peak, and all or everything that we can see, okay, in the economy, okay, it is like, it looks like that there is an illusion or a kind of bubble, that there is a bubble, okay, something like bubble, okay. And so back in 2008, 2008, 2009, okay, so that time there was the housing bubble, but this time looks like that there is this the debt bubble, bubble, okay, debt bubble in some form. So and this can be clearly seen through the stock market, because stock market is an early indicator, okay, of what is happening in the economy, right? So this means that overall the geopolitical situation, yes, and other than that, the geopolitical situation we have seen, okay, recently, okay, Russia, Ukraine, then the Middle East, okay, and now it is spreading, okay. So overall, the things are, okay, not good as they were supposed to be, okay. And for a movement, for this kind of movement that we are seeing here, okay, there's a bullish movement or heavy bullish movement, okay, it this kind of bullish movement, it was favorable, okay, just like the last time we have seen back in 2021, okay. So what was there back in 2021? There was the rate cuts, back to back rate cuts, okay, almost zero, almost rates were almost 0%, because the Feds and the government, okay, they wanted the economy to sustain and to survive. Rate cuts was one thing, and the stimulus, people were getting money from the government. So there were these the two factors, okay. Because of these two factors, even though there was COVID and the situation was not good, but still the stock market was moving up, because it was getting the, say, stock market can move up only when it gets a fuel. And what is the fuel? The fuel is the money. Without money, stock market cannot move up, as simple as that, right? And money, earlier it was coming, okay, from here, the back to back rate cuts, and this the stimulus package the government, okay, released, okay, that. So that, so money was there, okay, at that time. Now this time what is happening is that Feds are raising the rates back to back again and again, and now the interest rates are at the peak, okay, that we have not seen in many years or decades, okay. Other than that, okay, government is not giving, okay, any money, any more stimulus to the people, okay. People are using whatever they are earning, okay, or the money from their 401k, from their, retirement fund, okay. If the situation is very very different, then why the stock market is moving up? Okay, the stock market is moving up, okay, either number one, either they know that there is no near future, okay, and this something, okay, that very much resembles to what we have seen before, this the heavy correction or the recession comes, okay, then these kind of movements happen, okay, that there is absolutely no reason, and The stock market is heavily manipulated in the broad daylight, and now everyone can see that it is manipulated, but no one is doing anything. So this might be seen as the preparation for this, the long term. Okay, this is the long term picture, or this is the long term trend. But now there is a technique that we call as the pump and dump. Pump and dump. Pump and dump technique is used by the manipulators almost like most of the time. Okay, this is a very okay, very well known manipulation techniques. So they are pumping their own money. People they are not giving the money. Okay, at this moment, people they were giving the money when it was in this the long term bullish trend. But as of now, okay, that kind of money or that much of money is not there. That is why the manipulator they are using their own money to pump. Okay, once it reach to some level, then they will simply dump. Okay, and this is how they are going to make the profits, by trapping the people. Okay, so there will be a trap, people will be trapped, and then they will be dumped and gone. Okay, so they are doing this. So now the most likely, okay, this is the reason, okay, that I can see as of now, is that they are aware of what is expected to happen in the near term, and they are aware of that the Feds are going to keep the interest rates for longer than expected, and the Feds are expected to raise the interest rates further. This means that no matter what they do, the pump and dump, okay, or any kind of manipulation technique, it won't be any more useful. Okay, that is why they are in hurry. They are in hurry. And then on Tuesday onwards, okay, based on the CPI data, okay, the next movement or the upcoming movement, okay, or the near future movement will be known. So this seems a valid reason, okay, why all of this is happening, right? So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. Now guys, before I proceed further to the third point of the agenda, I have this one important information to share with you. That in this the program, that is S&P 500 or stock market knowledge transfer program. Okay, so I teach the movement, hacks, strategies, trend analysis, manipulation, technicals, predictions, support and resistance levels, and much more. And in this program, if you notice that there are these the three tiers, okay, and I've mentioned that what is included in these the three tiers. And other than that, there is this the spreadsheet, the Google spreadsheet. And in this Google spreadsheet, I mentioned in very detail what is covered in each and every tier. So now just like this, the 30% returns, okay, this program. So I am giving flat 20% off, okay, on these the two levels, on these the two tiers. And this is applicable until November 30th, by the end of this month. So if you notice that I gave my modified technical indicators, okay, and cover everything, including these are trading strategies, the options, okay, the options trading strategies, right? And other than that, the live calculations of options, okay, short term, long term, and everything. Then the resistance and support levels, okay, and you know, and if you have subscribed to my YouTube channel for last many months or years, then you know that my support and resistance levels, okay, they are exceptional. They works, okay, very perfectly in the stock market. Then how to predict the movement, the trend, the limit even before it happens. Okay, so these are there. How to reduce the trend of the stock market, how to predict the movements and all, okay, that is there. And there are some hacks, intraday hacks, short-term hacks, long-term hacks that work with 99% certainty. So these are the three tiers, three levels, and these are the terms and conditions. Okay, and these are the people who have participated earlier. Okay, so once again guys, I've given the link to this program in the description of the video and also in the comment section. And again, the same, that flat 20% off is applicable or will be there until November 30th, by the end of this month. Now let's talk about the third point of the agenda of this S&P 500 weekly technical analysis. So here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Okay, so daily chart, when we look into the technicals, okay, at first, yes, the candle. Okay, yes, if you look into the candle, okay, it's a heavy green candle, heavy bullish candle, right? So this last candle, it indicates that there were bullish sentiments at the time of closing. This indicates that on Monday there must come a gap up open, or irrespective of any open, okay, a bullish movement, right? But because it was a manipulated movement, okay, on this Friday, okay, similarly just like what we have seen, okay, last week also, this means that this gap up open or an upward movement initially, okay, it is not 100% confirmed. It may or may not happen. However, there are good chances. Okay. Now, let's talk about the technical indicators. So, technical indicators as of now, anyways, now the S&P 500 has closed above the Ichimoku cloud. Okay, it has cleared the recent high. Okay, and the moving averages are already in the fan out the condition. Okay, there is not so this is not a proper fan out, but still, okay, crossover is there, fine, so we can accept. Other than that, MACD, yes, so see, this is surprising that why there is a heavy divergence in the MACD. Okay, generally, so it is rare, okay, seeing this kind of divergence or the heavy divergence in MACD itself. Okay, it's rare, but still it is there. Okay, because and it was coming down actually, but because of the formation of this the heavy candle on Friday, okay, the divergence is still there, very heavy through MACD. Stochastic RSI and all other technical indicators are still holding. So this means that as of now on the daily chart, the S&P 500 is absolute or 100% bullish, absolute bullish. Okay, and at the same time, when we look into this, the Dow Jones, okay, Dow Jones on the daily chart is also absolute bullish, 100% bullish. Okay, this is 100% bullish because of the closing just above this cloud, right? Now, S&P 500 is bullish, Dow Jones is bullish. Okay, can we say that this is a true bullish movement? True bullish movement, that is the question. Okay, no, we cannot say that it's a true bullish movement. uh, See, technically it looks like that it's a true bullish movement. Okay, but because the recent movement, okay, what we have seen back to back, okay, almost every day, okay, just one except one candle, it was green candle, and it was a heavily manipulated movement after the dovish comments of the Federal Reserve Chairman. See, movement until Tuesday, okay, these two green candles, they are acceptable because on Friday S&P 500 hit the saturation. Okay, that's why, and that was the very first point of saturation. We have seen a reversal, fine, that was acceptable only until this Tuesday. Okay, Wednesday some a little part we can accept. Okay, but then what happened from Wednesday onwards, okay, until yesterday, okay, it was clearly manipulated. Because of the manipulation they have, or they were, okay, they were able to change the technicals, okay, the technical direction. Okay, however the manipulation was still there. That is why until and unless the S&P 500 sustains technically, I repeat, until and unless the S&P 500 sustains technically, we will not call it as true bullish movement. This is very clear. We will call it as bullish or absolute bullish, fine, not a problem. Okay, but it is not a true bullish movement. So let's see, S&P 500 can sustain in any manner. For example, okay, it goes into this what we call as the consolidation. Okay, means sustain, or it comes down again. It comes down, test, retest, test, retest, and then move up, fine. Okay, so then in that case we can accept that, okay, fine, now it is bullish, absolute bullish, and also it is true bullish, right? So this is the definition, okay, or this is how it works. So now guys, I have this information to share with you, that if you are looking for these are daily updates, the daily movement of the S&P 500 from Monday through Friday, every day, each and everything, as well as these the stock market opportunities, okay, minimum 5 to 10 every week, then you can join my Patreon community. So now in order to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my profile. Okay, this is my Patreon page. This is my Patreon profile. And on my Patreon page, you will see that there are these two tiers. As such, there is no difference between these two tiers. Okay, the only difference is the geographical location. So this is the daily S&P 500 updates for non-US and Canada residents. This is daily S&P 500 updates for US and Canada residents only. Okay, So once you subscribe to either of these, then you will be getting the daily S&P 500 updates, daily probable movement, daily updates from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market, the premium stocks of the Dow Jones S&P 500. And if you notice that many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these updates, daily updates from Monday through Friday, each and every day, and also the stock market opportunities in the premium stocks. So whenever you want to join my Patreon community, you are welcome, and I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 weekly technical analysis. And the last point of the agenda is the probable movement of the S&P 500 from November 13th, which is Monday, through November 17th, that will be Friday. So a few things that you must understand. Okay, the very first thing here is to consider that must be considered is Tuesday. Tuesday will be November 14th. Tuesday will be November 14th. Okay, at 8:30 a.m. Eastern Time, US and Canada, the CPI data, core CPI data will be published. Okay, the inflation data, in simple words, inflation data will be published. Other than this, okay, I think the expenditure, okay, expenses, or some other expectation data will also be published. But this is primary, okay, the CPI and core CPI. In last 2 months, I guess 2 months back to back, 2 or 3 months back to back, we have seen that the headline inflation, it moved up. Okay, for last many months it was coming down, but in last 2-3 months it moved up. The core inflation, however, sustained. Okay, but it moved up. Now this the movement, an exceptional bullish movement that was given on the Friday for no reason. Okay, if the CPI data, inflation data, core inflation data comes better than expected, again a bullish reversal, not just in headline inflation, but also in the core inflation, a bullish reversal. So remember this thing, and if you are my Patreon community member, then you need not to worry about these numbers of what will come, what will not come. Okay, I will clear each and everything in the pre-market update. This means that on Monday is now free. Monday there is nothing. Okay, whatever happened on Friday can be replicated on Monday in some manner. If not a heavy push, then maybe they can just keep it like the small candle, just up down, up down, up down. They can leave it as it is. Okay, so Monday, and then from Tuesday onwards, okay, the trend can change. Okay, and everything can change, all in the bull side and also in the bear side. Now there is a trend line. Okay, so this trend line, let me show you. And if you are a technical person, okay, in that case you can also see the same. Okay, so now there is a trend line, and we can see that yes, yesterday the S&P 500, it hit the trend line. Okay, a clear hit here at the trend line. Okay, so now what it means, there is a clear meaning of this, or see what the trend line says. Trend line says that whenever there comes a hit at the hit to this trend line, then it must reverse. Simple. Okay, and if you are a technical person, then you know that, okay, that by default this is the definition. Okay, technical definition, and it should happen, right? Yesterday it gave an absolute hit. However, there is one more concept that we call as a breakout. Breakout means if the S&P 500 gives a gap up open which is above the trend line, okay, and immediately upon open it moves up, or it comes down and it hits the trend line, tests the trend line, but doesn't come down and then try to move up, then that means it is a bullish breakout. Bullish breakout means that it was already bullish, now it will go more bullish. Okay, so technically that is the definition. But once again, whatever we are seeing here, okay, whatever this a movement, okay, and whatever is coming out of this, the movement, okay, so we must understand that this movement is not natural, this movement is a manipulated movement. Okay, except these 2 or these 3 candles, okay, this is a manipulated movement. On the manipulated movements, the technical sometimes works, sometimes may not work, because as of now it looks like it is bullish. Okay, but maybe that or it is possible or highly likely, okay, that they can simply dump. This was pump, this was pump, okay, and now they can simply dump. So in that case, we cannot say that technicals were saying that it was bullish means it will go bullish, but because now they are dumping, okay, whatever they have bought, and this means that the entire market is coming down, right? So we can consider the technical movement once the S&P 500 sustains technically. Okay, it comes down a little, test, retest, and sustains, fine. Okay, then we can say, okay, fine. Now it will work through the technicals, and in that case, the technical breakout is accepted. This means that if there comes a open, if there comes an open which is above this particular trend line on Monday, or it fulfills all of the conditions of a technical bullish breakout, then also there is no guarantee that the S&P 500 will be able to move up further, because of this pump and dump, this manipulation, this thing. Okay, some people will say that no, the S&P 500, it moved up yesterday, okay, to fill the gap. Okay, yes, there was a gap. And where was the gap? The gap was here, this candle, this and this was the gap to fill the gap, right? It moved up and now it has filled the gap. And if that is the case, then there is a gap, there is a gap, there is a gap. In that case, this means that the S&P 500 comes down, can come down to 4240. Okay, as of now the closing price was 4415. Okay, so yes, gap filled, okay, it is there, okay, and it works, okay, but it is not a technical concept. So if you are saying that this gap was filled, this means that these gaps will also be filled. Not just these gaps, 3972. There is a gap at 3972 that is still pending. So that gap will also be filled, right? So this is what the technical situation is. Anyways, through the trend line, I hope it is clear. Okay, uptrend. But yes, one more thing, okay, that I would like to clear here. If the S&P 500 through any means, if it managed to sustain above the trend line for 3 or 4 days continuously for 3-4 days, okay, and it doesn't give any good bullish movement, rather some normal bullish movement, okay, or some red or green, but it sustains above the trend line for 3 or 4 days, in that case we will have to accept the fact that now yes, there is a bullish breakout, and this will be accepted technically, that there is a bullish breakout. It will move up a little, come down, test, test, retest, and then bullish. Okay, so I'm not denying the fact that the S&P 500 cannot go bullish. Okay, even I was waiting for an opportunity. Okay, on this particular day, Friday, I was expecting that it will come down. Okay, then it will then we will see, observe a movement around 4291. Okay, and just above this one there is one more level, zone. We will then look into this the movement, and accordingly, okay, the bullish entry, okay, it can be seen. Now one more thing, and this is regarding the Dow Jones. Dow Jones, if you look into the moving averages looks like moving averages are about to give a crossover. This is the weekly chart of the Dow Jones. Now, if through any means, if there comes a crossover in the moving averages on the weekly chart, in case of the Dow Jones, then now the Dow Jones is 75 or 80% bullish. S&P 500 on the weekly chart is 75% or 80% bullish, and the moving averages are bullish. In that case, doesn't matter whether it is manipulated, non-manipulated, or who is manipulating, nothing will matter. In that case, it will simply go bullish. Simple. When I say bullish, this does not mean that there are no chances that it will not come down. Still the obligation is pending. Where is 4291? 4291, yes. Still the 4291 obligation is pending. It is not filled. It was supposed to be filled on Friday, but it is not filled. This means that, or any long-term bullish movement, okay, at first must come and fulfill the obligation to 4291. This gap market can fill later, okay, but as of now it should come to 4291, test, respect the 4291, and go bullish. So wherever the market want to go, okay, it can, right? Okay, you will not find, or you will not see 4291 anywhere in the any document, okay, or any of these are technicals. That is not there. So through my research, okay, I have found these the support and resistance levels, and these support resistance levels, they work beautifully. So on Monday, okay, first of all, there is a trend line. So as of now, we will stick to the trend line. Okay, what happens at the trend line? There is one more condition. Okay, even without the trend line, if 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 the S&P 500 comes down, closes inside the Ichimoku cloud, no matter what it does, okay, intraday. But if on Monday, if not on Monday, then on Tuesday, if it closes inside the Ichimoku cloud, so it doesn't matter. So whenever the S&P 500 comes, but it must happen like within 2 or 3 days. It must happen. Okay. If the S&P 500 comes, gives a closing inside the Ichimoku cloud, in that case, whatever we were talking about, bullish, absolute bullish, and the probable true bullish, no, that is not going to happen. Highly likely it will then give up and it will re-enter into the bearish side. Okay, but still the Tuesday will confirm, okay, where we are heading to. And if the data comes confusing, okay, then in my pre-market update, okay, I will confirm, okay, where the stock market is expected to be seen, okay, or where it will be trading. Now question is that if it comes down, then to what levels it will be coming down? It will be coming down simple. It will be coming down to 4291. Not exactly 4291. There is a zone. Okay, just above there we have one more mark, one more level, that level and the 4291. Okay, it creates the zone, as simple as that. Okay, so that zone is there. Whenever it will be coming down, it will be hitting the zone, and then whatever happens here in the zone, not necessary that the S&P 500 will hit exactly 4291. Okay, however, as per concept, it must hit 4291 exactly. It may, so it can breach 4291. That can also happen. Okay, or it can remain a little shy of 4291, but as long as, okay, it is there in the zone, it is getting the support from the zone. Okay, that matters. Okay, comes down, sustains, okay, in that case a bullish movement is possible. Okay, fails, and okay, so on. Now this is the bullish movement. Where exactly this the bullish movement is happening? Okay, or where this the S&P 500 is heading to, if we consider, okay, these the numbers. In that case, let's use the Fibonacci. So now when we use this the Fibonacci, then there is this the interesting thing. S&P 500 closed at 4415.23. The Fibonacci, this the 61.8%. Fibonacci retracement level 61.8%. It was at 4414.90 approximately. Okay, this means that by giving this kind of unnatural, heavily manipulated push, okay, was to breach the to close above this Ichimoku cloud, as well as to breach the 61.8% of the Fibonacci retracement level. Okay, so this heavily manipulated bullish push, it has served two purposes, not two, three basically. Number one, that whosoever was bullish, okay, and were thinking that by the Friday, okay, it will remain bullish, by giving a bearish movement on Thursday, okay, the market manipulator, they have made a lot of money in options, because people were bullish, there was a heavy open interest. And if you notice that in my update also, I mentioned the same thing, that the open interest in the bull side was very heavy, okay, for this the Friday expiry. So on Thursday, those who were thinking that on Friday, okay, it will go down, okay, technically, okay, and all, then we have seen that on Friday they have given an opposite movement. Okay, again they have made a lot of money, and retail traders, they have lost the money. So two times, okay, they have made money back to back, and that was the same I mentioned in this my update. The 61.8% will still remain there in the picture. Okay, so what happens is that most of the times, or generally what happens is that whenever the stock market comes, okay, it hits the 61.8%, then that time, after the exact hit, it should give a reversal. Okay, or generally, okay, it might breach the level, it might try to sustain above the level for 1, 2 or 3 days. However, if it fails, okay, if it failed to sustain properly above the 61.8% for 2, 3, 4 days, in that case again it will come down, because 61.8% of the Fibonacci retracement level is, okay, this is the golden level of golden resistance, okay, it is called a golden resistance. So now all we have to do is to see that how the S&P 500 behaves, okay, at this level. This will be clear as early as on Monday. If not on Monday, then Tuesday everything will be clear. Okay. Now, yes, in the bull side. So in the bull side, if I talk about that, let's consider, or let's say if the S&P 500, okay, sustains, okay, in this the bull side, then where it will be heading to? There is this the resistance level, okay, that is at 4425, okay. Not exactly but there is a zone, okay, a little zone, okay, around the resistance level, okay. Just after that, okay, after a few points, then there is another, I think very heavy zone, okay. So that I will mention the numbers, okay, in the pre-market update. So now it is heading to this, the 4425. Now 4425 is my calculated resistance level, very heavy. This means that now any more bullish movement should be restricted to at or around 4425, okay, at least by Monday, okay. Tuesday what will happen is a different case, because Tuesday, if the data comes, if the inflation data comes in favor of the stock market, okay, in that case this will not work. In that case it will further move up. If the data doesn't come, okay, in favor of the stock market, in that case, okay, a reversal, okay, provided that they accept that okay, this particular data. And looks like that they were in hurry, very much hurry, okay, here also, okay, because they might know that something may happen. However, I am not speculating whether the inflation will move up or it will come down, okay. Let the experts handle this particular data, or this situation, okay. This Now what after this, the 4425, okay, after 4425, if we see, then it has 4500, okay. There is a very heavy zone, very heavy zone. Last time also when it was moving up, I think it has failed there, failed sustain, again failed there at the zone, it came down, retraced, failed, and then entered, okay, in the long term, okay. So that will then come into the picture, right? So that is there in the bull side. Now let's talk about the bearish side, or the bear side, okay. That what can happen in the bear side, where it is going to find the support and all, okay. So guys, before that, let me remind you that I am offering additional 10%, okay, returns, means total 40% returns through this the program, that is the 30% returns in 1 year. Now it is 40% returns in 1 year, okay. And this offer is valid until November 30th, the end of this month, and only on the capital that is more than $500,000. Now let's talk about this, the bearish side. So bearish side, as we know that as of now S&P 500 is still under technical obligation of the 4291, or the zone of 4291, okay. Although if we consider that the gap fill theory, in that case, okay, the gaps are pending, 1 and 2, these the gaps are still pending, okay. Yes, this also means that if the CPI and the core CPI data comes very heavy, extremely heavy, okay, or extremely against the stock market, okay, and the market manipulators, they accept the data, okay, in that case I think like within one candle, only within one candle, okay, this gap can be filled. And if I consider, or if I just like, that candle will be 3 point or 4% within a day. Yes, can happen, 4% can happen, okay, provided there comes a gap down open, and it comes into, or it enters into open equal to high condition. High, this is the condition, there comes a gap down open, okay, there comes a, this the open, gap down open here, and then immediately upon open it goes down, okay. So that condition can like within one candle, both of these the gaps can be filled, okay, considering okay, there's a theory that the people have. However, this is not a technical concept, okay. But yes, like almost all of the times, okay, this it works, or most of the times it works, this is the gap fill, okay. Now I was talking about this, the bearish movement, the bearish side. In the bearish side, 4291 as of now, in the zone of 4291, okay. I'm not talking, and I'm not relying on this gap, this the concept. However, I'm relying on my 4291, okay. Historically I've shown you that how it works. This means any failure for now, Okay, or at first, in order the bearish condition at first, that it must close inside the Ichimoku cloud, then it will find the support at the boundary of the Ichimoku cloud, okay, as the concept says. Once it closes below the Ichimoku cloud, and yes, there is one more thing. This time when it comes down and it closes below the Ichimoku cloud, even a single candle will suffice or will fulfill the bearish condition. In that case, doesn't matter what other technicals are saying, it will go bearish. Okay, that is there. Now whenever it goes below this Ichimoku cloud, below the Ichimoku cloud, in that case what will happen, it will be very near to the 4291. This means that, like, intraday itself, okay, it can hit the 4291 or the zone of 4291, and then we need to see what is happening. Or let's say in 1 or 2 days, it takes 1 or 2 days and it breaches this the 4291 or the zone of 4291. In that case also we need to be careful, because it may be a bearish trap. Because again we need to see where it is closing for 2 consecutive days. If it gets a bullish retrace, closes above the 4291 or above the zone of 4291, okay, and there must come 2 closings above this, and then it clears, okay, this is the Ichimoku. In that case it will be going into, or it will be entering into the long term bull trend. Long term bull trend that I can say up to December 13th or 14th, means the next FOMC meeting. Okay, only up to that day. Whatever trend it will be, okay, long term bullish, that will be up to December 13th, and then the next FOMC it will be decided, okay, what should be done, okay, where the stock market should go. Okay, so but yes, one thing is clear, that once it comes down and once it closes below this Ichimoku cloud, in that case bearish. Okay, even a single candle will suffice that the condition. Now, or more fall from here, from 4291, okay, will be handled by the 200-day EMA, 200-day EMA, and I think that will be more than sufficient if there comes, okay, that kind of fall, and if the S&P 500 comes to this, so 3%, for gap fill 4%, for the moving average, 200-day moving average, it is 3%, 3.25%. Fine, that is perfectly fine. Okay, S&P 500 can fall up to 5% within a day. So anything up to 5% is fine, not a problem. Okay. Now, in case of the fall, provided that so for the fall to happen, okay, the condition must be, okay, there, that that the CPI data and the core CPI data, okay, this the inflation must go bullish. It must push the stock market down. Okay, that will be there. And yes, through this, okay, I missed one thing, is that yesterday the stock market was up, and also the bond yields were up. Bond yields were up, and the stock market was heavily up. And I have seen this news. Okay, generally what happens in these news channels, okay, or these news websites, they were saying, so there was no reason why the stock market is moving up. So they mentioned that because the bond yields are down, that is why stock market is moving up, because they have to support support the manipulated movement, and this is what, okay, this is what they are paid for. So they were saying, because the bond yields are down, that is why the stock market is moving up. But by the end of the day, we have seen that the bond yields were bullish, stock market was bullish. Okay, so this means that was a lame excuse. Okay, they knew, but again, I think the bearish movement, the bullish movement, this part is clear. Bullish movement, the limitations of the bullish movement, and the conditions for the bullish movement and the bearish movement, this thing is there. And the purpose of this candle, okay, that why they are in hurry. Okay, if the CPI and the core CPI data comes against the stock market, this means that yes, the stock market was heavily manipulated in broad daylight, technicals and levels. Okay, so combination of these two help us to trade, okay, safely, even in these kind of scenarios. But if you feel lost, or if you do not know what is happening, why sudden change, why these things are happening, okay, what is expected to happen and what will happen, in that case you can join my Patreon community. And through this, the Patreon community, okay, I give the daily updates, a daily analysis from Monday through Friday, every day. Okay, along with these, the stock market opportunities in the premium stocks of the US stock market. Okay, so I've given the link in the description of the video, and also in the comment section, so you can use that link in order to join my Patreon community. So guys, hit like if you have liked this video, and if you have any questions that you want to ask, then please feel free to ask your question through the comment section. Anyways, so guys, this was my S&P 500 weekly technical analysis for the week of November 13th. That is from November 13th, which is Monday, through November 17th, that will be Friday.